What's up, traders and investors? I hope you're doing well. Today we got something kind of special. We're going to be talking about stocks versus Forex. Now, this is something that is I'm torn into two camps because I've been a long-term stock market investor and a Forex trader for the last multiple years of my life. So today we're going to break down some of the pros and cons of each so some of you guys at home can hopefully make a better decision on whether you want to trade Forex or if you want to trade stocks, which might be a better fit for you. So stay tuned. Let's get into this one right now. Hey everybody, so you're in for a special treat today because I'm going to be writing on the board, which you can see my terrible handwriting. Please be careful in the comments not to flame me too much, but you'll be able to see my ugly handwriting, and we're going to be comparing some things about stocks and Forex. Now, before I get too far into this, we have 2 free newsletters for both of these concepts. So if you're interested in Forex or you're interested in stocks, down below in the description, completely free, no strings attached, there is free analysis being shared by my team to do research and analysis for you in both the Forex or stock market area. So you can get access to that completely free down below in the description. Check that out. So let's talk about stocks and let's talk about Forex. Which one is a better fit for you? Now, this is not something that I can strictly say, oh, Forex is better or stocks are better. This is going to come down to your personal preferences, and please know people blow their money and lose their money in both of these just as easily, just as much. I guess there is a little bit more leverage available in Forex, but people who want leverage, they'll go and find it. So be careful with that stuff. So let's go ahead and jump into the analysis here. Today we're going to be talking about stocks and Forex. So let's start here with stocks, which is what I actually initially started out in back late high school when I was like 18, 19 years old, just getting into this stuff. So let's talk about some of the pros of being a stock market trader slash investor. The first pro here is that there's a lot of stocks out there to trade. There's thousands and thousands of stocks that you can look up on the market and research and find potential investment opportunities based on what those companies are doing, what they earn, that sort of thing. And that's really cool for people who are looking for a diversity of things to trade or get involved with in financial markets. Another pro is that there is a lot of long-term growth potential. Any company over long-term standards that is actually making money and doing well, theoretically, the big keyword there, theoretically should go up in value, right? Think of something like Costco or Apple or some stock that you've heard of for 50 years, right? It goes up over time. Coca-Cola, they make money and they continue to grow and add more profit to their balance sheet over the long term. So there is that great potential there to be a long-term investor when it comes to stocks. And I find that very, very cool. Not as interesting as investing, for example, in the Australian dollar or the US dollar. Sure, some people may be doing that, but I personally would rather long-term invest in something like a stock that I truly believe in. So let's talk about the third pro for stocks, which is going to be that there's a lot of volatility for those of you guys who are interested in day trading in the stock market. Now, the cool thing here is that right around 9:30 a.m. US Eastern, the stock market gets going. Now, if you're in a different country and you're trading a different stock market, that's going to usually be sometime in the morning. You'll have to figure that out, but I'm an American, so I know my own stock market. So 9:30 US Eastern is when the markets officially open and volatility spikes like crazy as people rush to buy or sell stocks in the opening bell. So that can be really good for those day traders out there who want those high-paced, big movements that are going on in the markets. Now, notice also that there's a lot of opportunity for swing trading and longer-term investing. So whatever you want to do in the stock market, there is quite a bit of diversity there to choose from. Next up is that there is actually less to look at, in my personal opinion, when making an investment here than something like a macro trend like the US dollar, for example. The US dollar has millions, literally millions and billions of variables that make the price go up or down in value. But when we're talking about a stock, there are still a ton of variables, don't get me wrong, still millions, but I would argue that there's potentially less to look at. You have things like a CEO, the revenues of a company, right? You have their long-term performance. That sort of thing can go into pricing a stock, but it's a lot less, in my view, than the macro trends of the entire world economy that might go into pricing the US dollar. And finally, with recent progressions in the world of stocks, commissions are going out the back door, which is great for people who want to trade and invest, especially if you don't have a lot of money, and $5 per trade is actually a lot to you, right? Because getting in and out of a trade, if it costs you $5 to get in, $5 to get out, you cost you $10 just to place an executed trade, right? Well, now things like Robinhood leading the way, and now some of the other major brokerages are allowing people to get involved with stocks for a lot less because they don't need to pay commissions. In fact, they have free commission models. And as things get more progressively better in the world of tech for trading and investing, I would imagine that everything is going to head this direction in the next maybe 5-10 years. We'll see. Okay, so with that said, we need to also talk about the cons with the stock market because it's not perfect, just like nothing is when it comes to investing and trading. So let's dive into some cons about trading in the stock market. Now, one big con for me is that there's less market hours. Let's say you're the average person who gets up in the morning and they get ready for work and they're out the door and they're off doing their thing for the day. Well, the stock market is going to be rough because, again, if you like volatility and the market starts up at 9:30 and you're at work at 9, well, it's going to be tough for you to catch that volatility. So there's a little bit of give and take there. The cool thing is one of the reasons that I actually switched over to Forex back in the day, or at least not switched over completely, but I started getting involved with Forex, was because I could trade 24/6, meaning there's 6 days out of the week where the markets are open for foreign exchange, and there's lots of different hours where volatility picks up, such as the Asian, New York, and London session. So I could actually trade while I worked a full-time job back in the day, which is really, really cool. It gave me that opportunity to still catch volatility without actually, going home early in the morning at my job just to go trade or something like that. So very cool perk there for the Forex market, and kind of a con for the stock market if you like shorter term trading or volatility there. Now the next one is that there is less leverage, which is kind of a pro and con. It depends how you look at it. There's usually when you buy a stock, you're using one-to-one leverage, right? If I take $500 and invest it in Apple stock, well, the most I theoretically could lose is $500, give or take. Sometimes there's exceptions and anomalies, but for the most part, that is what it is, right? In Forex, you can actually leverage the heck out of your account and lose much more than you even invest very easily if you're being irresponsible with leverage. So leverage is a double-edged sword. It can be great and it can also be terrible. Guilty. Now, Will says guilty from behind the camera. Also, this is another con that people may not realize. Well, I hope they never have to realize this, but stocks can go to zero. So you can invest in a company in the stock market, and unlike Forex, where if you trade the Euro/USD, theoretically there's probably never going to be a scenario where the Euro-dollar evaluation between the two goes to absolute zero. But in stocks, it's more than possible. There's many times where companies go bankrupt and they go from $30 a share companies, $50 a share companies down to absolutely nothing. So be careful of that because it can happen and stocks can go to zero. I've seen it happen a lot of times with companies I didn't think would possibly do that. Now I've seen the opposite as well, where things spike absolutely crazy the other direction, and that's why shorting stocks is another list of cons, in my opinion, as to why it's very, very difficult. Because if you short a stock and the stock goes up 300%, you are down a lot of money because you can lose more than 100% when shorting. So that is something to think about, and shorting in the stock market is risky because, again, back to the earlier point, over time, usually the stock market goes up, so it can be tricky to short stocks profitably. It's possible, people do it, but it is a little bit tricky. Finally, the last one about the stock market is that the stock market is subject to a rising or falling market. Now, this is kind of every market. Usually there's correlations across the entire board, the US dollar correlated to the stock market, that sort of thing. But when it comes to individual stocks, the individual stocks in the market are usually going to go up or down with whatever the US market is doing, right? The overall market. If it's a very bullish day and the president tweeted something good, the market could go up and your stock could go up with it. Now, if the inverse happens and the president tweets something bad and the market starts going crazy down, well, guess what? Most likely your stock is going down with it, which is kind of annoying in my opinion because you could be right about a company but wrong about the overall market timing and still lose money. So that is a tricky con in my opinion when it comes to stocks. All right, so let's talk about what a lot of you guys on this channel probably know a little bit more of, which is Forex. Let's talk about the pros and let's talk about the cons of Forex. And then after this, I'm going to talk about whether I prefer Forex or stocks and why. So Forex is kind of cool. Like we mentioned, it's a 24/6 market, which is really cool because if you're like me when I first started my job back out of college, you know, I didn't have a lot of time during the day to be trading. I was at work, I was doing my thing. So at night, I was still able to trade, which is a huge perk because I was allowed to actually sit down at my trading desk, sit down, take into account lots of different things, and not feel like, you know, I just had to do it on my phone really quick while I was doing something else at work. That was really hard to seriously trade like that. So the cool thing about Forex is it allows you to have many market hours to trade, and you can do it whenever you're really free and the markets are moving. Now, the other pro/con here is that there's only 8 real major currencies that you can trade in the foreign exchange market. You've got things like the US dollar, the pound, the euro, the yen, the Aussie, New Zealand CAD, and the Swiss. I think that's all 8, we'll see. I think it was. But for the most part, there's only 8, which is a pro and a con at the same time. It's a pro in my opinion because there's less to look at. You don't have to look at a million things. You can just keep track of a few markets that you really kind of specialize in, as opposed to stocks where there's thousands of individual stocks that you can, you know, go off in any direction with. And there's also a con with only 8 because it doesn't allow you to go off in as many directions, which can actually be good for people who want to explore more avenues. Now, the other really great thing about foreign exchange is that there's a ton of liquidity, right? There's so much money that goes through the Forex market. If you were to pick up a barrel of water, one single drop would be the stock market and the rest of the barrel would be the foreign exchange market. There is so much money moved in the foreign exchange market every day, literally trillions and trillions and trillions of dollars. So with that said, that allows us retail traders to get in and out with relatively liquid movements, which is great because it means that your expenses for trading are relatively low. Now, finally, another pro here is that if you like global macro trends, if you're a fundamental trader, which not everybody is, but I like to keep in check when I'm looking at my investments or trades in the foreign exchange, global market macro trends can be a really interesting thing to some people, right? For example, you can keep track of the overall US dollar, the macroeconomic, stuff that's going on, and that can be a great way to kind of just get everything from a big picture rather than trying to get every little detail of a particular company like we do in stocks. So there's that pro for people who prefer that. Now, we also need to talk about, though, the cons of Forex, because it's not perfect either. There is no perfect investment area, but just rather what you prefer. So some of the cons is that for new traders, there's a lot of leverage available in Forex. It's so readily available by so many brokers that it can get people in a lot of trouble, especially new traders who don't know what they're using. It's like handing fire to a caveman who has no idea what he's holding. He's gonna burn himself, right? That's leverage for new traders. It's dangerous, it's risky, and it hurts people more than it helps people early on. So we have to be aware of that when talking about Forex. Leverage is a dangerous thing and it's very readily available. So I would say that that's bad for beginners and it's okay for people who know what they're doing and know how to not abuse leverage. Okay, next up, there's gurus in Forex. I'm sure you've heard of them. There's thousands of them online, but there is also there's Forex gurus, there's also stock market gurus, people who hype up, going crazy on penny stocks or making millions in the stock market or the Forex market. They're everywhere. They happen to be kind of like the eyesore of the entire industry. They make people like what we try and do on this channel, which is try and keep it real. They make us look worse because it's like, well, everybody in this industry seems sketchy, right? So they give the industry a bad name. But you have to be aware of that in any financial market or any financial avenue anywhere. Real estate, anything has plenty of gurus who try and make it seem too easy. So just be aware of that in any market. That's just a good little message to throw in there in the middle of this video. Okay, so finally with Forex, another thing to think about is that Forex does have a lot of a learning curve. I mentioned earlier that stocks over time tend to go up, and in my personal, very, very simple, humble opinion here, I like the idea of long-term investing and think it's a little bit easier than trying to actively trade. And I don't think that that's gonna ruffle too many feathers, because when you're talking about long-term investing in the stock market, you're probably going for reasonable gains with as little risk as possible, depending on how you build your portfolio, with potential growth longer term. You're not trying to make quick money or big money short term. Now, when people get involved with trading, a lot of times that's where they start, but after time in the trading realm, I realized that, okay, my goal is to actively manage my money and hopefully do better than I can in the long-term investing side of things, but I understand the value of both. the cool thing about long-term investing is it's relatively passive. You choose companies and you let those companies build over time, and you don't have to sit there and watch it every day, all day long. Every single day, I'm looking at my computer, I'm analyzing trade setups on the shorter time frame, and that is time consuming. So you have to ask yourself, what am I doing this shorter term trading for? And the answer should be probably because you love it, number one. Number two, you're trying to attain bigger gains by being more active and looking for proper setups that yield trend results with shorter term trends that are happening in the market. So just something to think about. There is a learning curve to trading. I think that it's a little bit steeper than trying to learn to invest, where again, if you're investing slow and steady passively, I think that that's a relatively easier thing to get involved in, investing in long-term ETFs, that sort of thing. Finally, with Forex, there's a lot less regulation. It's not as regulated for the retail side of things. The stock market has been tradable and investable for individuals for a very long time now, but the foreign exchange market for individual retail traders is relatively new, not more than 20 years old at this point for the most part, right? There's a lot of brokers now that make it available to traders like yourself probably and me, right? So that's kind of a cool thing that is available, but it is a less regulated space, so you have to be aware. There's a lot of scams, there's a lot of things that are not fully developed, so be aware of that. So that's all I've got for the pros and cons, but I'm just gonna share my personal opinion here at the end of the video on which one I prefer, and the tongue-in-cheek answer that I've got for you is that I prefer both, because I like to long-term invest in stocks. If you haven't heard, throughout this video, I've been low-key hyping that up the whole time. I love to long-term invest in stocks. I own a couple different portfolios where I add money to those portfolios, and I've been building some dividend stock, portfolio basis stuff, as well as some growth stock stuff for the long term, where I'm looking to capitalize on long-term growth in companies that I really believe in. And I love to trade Forex relatively actively. Now, I'm not a super short-term scalper or day trader like that. I love to swing trade Forex and take my time with setups. So I think that there's pros and cons of both of these, as we've mentioned, and at the end of the day, you're gonna have to make up the decision as to which one you prefer more. What is more valuable in your personal situation? And I hope this helps. Thanks so much, and we'll see you back in the next video.